I'd like to get across some of the key macro themes driving markets at the moment and some charts to back it up with Peter McGuire, who's from XM. Peter, good morning to you. You got the FT there, keeping yourself informed. Yeah, there you go. What do you make of where markets are sitting? It certainly seems as if the bulls got a leg up last week.
Absolutely. Good morning, Nadine. Lovely to see you. Yeah, I tell you what, it's ended the week very, very strongly. And, your NASDAQ up just on 2% at 1.99, shot the ball out of the park. And over those losses that you had over the early part of the week, it made up for most of them. And still, 5130 sort of number for the S&P 500, which is not a bad number considering, it's well past 5,000. So the weaker than expected job number came in soft and, 174, 175,000 down from expectation of about 243. So, probably that's starting to bite a little bit harder.
Okay, so we are watching markets in general to see if this positivity can continue to flow through as we continue to get U.S. reports dropping as well. We still have NVIDIA, obviously a really big one, looming large. But can we switch to oil, Pete? Because I know this is a market that you watch very closely. And of course we do as well with geopolitics, the backdrop. But oil is just so important in terms of the inflationary outlook around the globe as well.
Absolutely, Nadine. I mean, that really can spike inflation quickly. And when you're having geopolitics to roll into it, I think that you've seen the best part of, say, $4 to $5 stripped out of it from a geopolitical concern, or that premium that was built in. So that's been stripped out, and you're now running, $78 odd for WTI. It's about 78.10, and you got just under 83 for Brent. So that's the story. I mean, it was a big sell-off, and I think you'll probably see a little bit softer moving into this week. Let's see what happens from, always geopolitics plays such a huge part of it, but traders all over the globe are, I think they enjoy the movement with the crude, and that's the opportunity, and charts tell the story. It's under that SMA, that simple moving average, the yellow line. So that's what it means, 50-day simple moving average, and Nadine, probably a little bit more softness.
All right, we will be watching that one alongside you, Pete. Bitcoin, wow. It's really had a revival to start 2024. Is that just a reflection of the massive flows that we've seen into those Bitcoin ETFs, or what do you see as at play here?
I think that's the first part. The second part is naturally the halving that we saw in April, Nadine. It was overbought to the upside at 72, 73,000. It was very, very strong. It was in there with conviction, and then it sold off pretty heavily back to around that 58 sort of handle. It's really bounced, and it's bounced nearly $1,000 in the last 12 or so hours. It's back over 64,000. So it's choppy. And I think, again, if you want something wild to trade, Bitcoin answers that. It's under that simple moving average at the moment, but the 200-day. So that's how traders trade. You need to look at those interpretations as far as charts, and then you roll your technical, analyst tools across it. Is it Bollinger Bands? Is it, RSI? What exactly are you trying to achieve? And that's what traders, when you trade an instrument like this, Nadine, really rings home, the volatility and the opportunity.
All right. Look, Bitcoin, volatility and opportunity, that's a way to hedge your bets. We don't talk about it a lot, but the sterling paired against the United States dollar, so the US dollar pair. Is this sort of a bearish story in your view?
Well, I think so, Nadine. I mean, it's buy dollars and wear diamonds. And that's what the pound has really showed us. The softness of the pound. US dollars had a big crank up. And you're now sitting, as I said, the best part of 105, 105.20. It's given up a little bit of gains, but the pound's been sold off sharply. And we've seen those, again, opportunities that it presents itself. It's narrow trading ranges. It's a great market to trade. It was fantastic last week against the yen as well over the last week or so. So, when you roll it across from Great British Pound to US dollar, what it's doing against yen, euro, even the Aussie, it allows much opportunity, and that's the beauty of trading this 24 hours a day, 5 days a week. The market never sleeps.
Well, you mentioned the Australian dollar, and I suppose most of the focus in Forex markets lately has had to do with the Japanese yen, Peter. Of course, we don't have confirmation, but suspected intervention twice last week from Japanese authorities. So when you think about, the Japanese yen, there's lots of joking about everybody, packing up and taking their Japanese holiday right now if you're an Aussie. But
Yeah.
where do you see this sort of story evolving through this week?
Well, I think the Japanese yen, I want to see what happens to it. It's back around that 153.30 sort of handle. It was sold off heavily from that 160. It came crashing down to, 152.80 sort of number. So that's where you've got to be careful trading these with high leverage, Nadine, because you can be crunched out and, just get squeezed terribly. So you'll just be exited from the market. But if you're rolling futures, you've got, you play that with a lot of risk attached to it. And, that's where you've got to use derivative tools to identify what the opportunity is. And when you've got government bank intervention, that changes the whole footprint as far as risk tolerance and so on. You got the Aussie running at 66.10. I put my mind back to 85. Must have been very young then, Nadine, but it was at 242 against the dollar. So really, if it's running at 153, you're a long way from those sort of numbers that we had nearly 40 years ago.